Hello, I'm Ant Joblin and welcome to IPGo, the show where we take a look at the IPO world, past, present and future. Today we're going to take a look at a potential IPO that sits at the heart of geopolitical events and has the potential to be one of the biggest companies ever to float. It has been on-off for quite a while now, which really just underlines quite how sensitive it has become. Best of all, the true value of underlying business is extremely difficult to determine. This all sounds like a recipe for disaster, but this company sits at the top table of the global energy sector. Saudi Aramco is the state-owned oil and gas company of Saudi Arabia. The Saudi government has suggested its total value could be in the region of $2 trillion, although other estimates have been as low as $500 billion. Aramco sits on 263 billion barrels of crude oil and 320 trillion cubic feet of natural gas, much more than any other private or state oil company, and the firm reports impressive earnings. For perspective, bear in mind that Aramco announced net income for the first half of 2019 of $49 billion, which is almost double the GDP of Estonia. The company aims to float 5% of its shares in order to raise capital to invest into a diversification fund that will restructure the Saudi Arabian economy away from energy dependence. It's all part of the country's 2030 vision. The Saudi government has already floated reducing taxes and royalties on Aramco in order to make the investment more attractive to outside investors. In terms of venue, both London and Hong Kong were suggested, but it looks like New York, with its more stringent disclosure requirements, is the most likely if it happens on an international exchange. This potential submission to heightened scrutiny is a positive for investors, as London is the most typical venue for the international energy companies. The last attempt to list had Aramco envisaging a two-stage listing with about 2% of the capital trading on the Tadawul exchange in Saudi Arabia and an additional 3% on a foreign exchange, most likely New York. Events in the Middle East have remained characteristically fluid, with conflicts in Yemen and scandals like the murder of dissident Jamal Khashoggi have dented the Saudis' reputation. But a bigger problem remains: how to properly value the business and the remaining oil reserves. Now, it is widely known that the Saudis are very protective over their oil reserve data and consider it to be a state secret. That makes sense. However, it is a bit of a problem for a listed company. The amount of oil brought out of the ground and sold daily is able to be audited and cross-checked, but very little exists to examine the reserves. The company has not submitted an independent audit since 1980, and the stated reserves have hardly changed since 1998. Furthermore, in 2011, diplomatic cables leaked by WikiLeaks revealed that the company might not have the reserves it claims. This issue is suspected to be the reason why the IPO was pulled in 2018, when the government got cold feet. Showing your hand in what is perhaps the most aggressive of global markets, layered with geopolitics on top, is not an easy call to make. Nevertheless, the government is intent on raising $100 billion for its 2030 Vision Fund, and the idea of an IPO was revived this year. The latest commentary comes from the kingdom's de facto ruler, Crown Prince Mohammed bin Salman, who has said recently that market conditions will determine whether the IPO goes ahead. Aramco is expected to launch the first part of a two-stage listing in October 2019, but sources suggest that the energy giant decided to push the trading date back to December or January. Whether or not this IPO goes ahead in coming months remains to be seen. It looks likely that if it does, New York will play a key role. However, this is an IPO like no other. One final factor that should be appreciated is the captive audience that the Saudis have, which will add support to the listing if it goes ahead. Reports have emerged suggesting that the royal family are coercing leading families into becoming cornerstone investors in an attempt to build broader confidence. If you're unsure as to how effective this will be, think back to MBS's corruption purge in 2017, where hundreds of corrupt royals and officials were rounded up and some $400 billion linked to corruption was returned to state coffers. Nevertheless, investors will be forewarned to go the extra mile with due diligence before placing orders. That's all we have time for today. Catch you next time.